In today's world of high interest rates and high insurance rates, is it still possible to buy a home with no money down, like this home behind me, or any number of homes that are in your area? The short answer is yes, it can be done, even in today's environment. But how do you do it? That's what we're going to talk about in today's video. So if you like the video at the end, please give it a thumbs up. And if you want to subscribe, you can do that as well down below. So how do you do it? How do you buy a home, no money down, in this market or really any other market for that matter? Well, when you're investing in a home, there's two main expenses that you're going to have. Obviously, the sales price. You're going to pay the money for the house. How do you finance that 100%? And then you have, number two, the closing cost. How do you finance those closing costs, those lender fees, those attorney fees, that year's worth of insurance up front? How do you get that done? We're going to address both, and we're going to break it down into each section. Number one, the sales price. How do you get the sales price financed 100%? The first great option is a VA loan. Active duty military, veterans that were honorably discharged, you have the opportunity to get 100% financing through the Veterans Administration. Hugely popular program, very successful, very popular, great terms. 100% financing for the sales price of the home. Number two is USDA. Yeah, the same USDA that is stamping your chicken and your eggs and your steaks. They have a program called rural development. Don't let the word rural scare you off, right? Because it doesn't need to be farmland or out in somewhere in the boondocks. It can be, there's a lot of suburban areas, a lot of metro areas are rural development eligible. You have to check with your local lender and according to the map that they have. So check with your lender for what area where you live is eligible. 100% financing for the cost of the home as well. Number three, FHA. Wait a second. FHA always requires at least a 3.5% down payment. True. However, sometimes lenders or communities or states offer bonds and grants. Grant you don't have to pay back, bond you might have to pay back, or there's another interest rate tied to it. Just depends on the criteria of that bond issue at the time that can pay for that 3.5% down payment. So you borrow from FHA, and then your 3.5% can come from that grant or that bond issue. That could potentially be 100% financing. So then what's left is the closing cost. Again, those are your lender fees, those are attorney fees, the cost of the insurance for the first year. What does that look like? So most common, whether it's USDA, VA, FHA, a lot of times, is people have the paycheck to pay to own their own home, but they don't have all the funds to go ahead and put the money down. A lot of times buyers will ask the seller to pay for it. They'll contribute this. We ask, let's just say it's $300,000. We'll pay $300,000 for the house. We want you, Mr. and Mrs. Seller, to pay $10,000 of our closing costs and prepaids. That's a thing. And as long as the negotiation's right, you're paying a little bit more for the house, like at list price or close to it. And depending on what your estimated closing costs are, the seller will agree to that, especially the longer it sits on the market. That's a great incentive. And that's literally no money out of your pocket at the closing. Typically on USDA loans, I've seen buyers get a check back at closing, like the earnest money deposit they put down, they'll get that back. So they're getting keys, they're getting the house, and they're getting a check back. Like, that's a win any day of the week. Ask the seller to contribute. Number two is going back to those same grants and bond issues that lenders or communities or states offer at times. They can also apply that instead of down payment, that can go towards closing costs as well. Another great option, just depends, are those available at the time. Ask your lender. You can ask your agent as well, because a lot of times they'll be aware of what's going on in the marketplace because they're communicating with lenders all the time. Number three, lenders sometimes directly will offer a closing cost assistance. Like when interest rates first started going up, we were getting calls from Chase Bank all the time and emails saying, hey, we'll pay $2,500 of your buyer's closing costs. Like, they were able to do that. They were going to probably just knock down a lot of their fees, but $2,500 here, a seller contribution over there. Suddenly, you're buying a home, no money down. Great option. Number 4, builder incentives. If you're going to buy a new home, especially your regional and national builders like D.R. Horton, they're offering crazy incentives right now for people to buy their homes. $10,000, $15,000 worth of allowances, or you can apply that in some cases to closing costs. So you get a new home, financing the purchase price, and they're going to contribute as an incentive for choosing their home. They're going to pay your closing costs. Also, another awesome way to do it. Literally getting a home for no money down. Whether it's the home behind me, whether it's another home in your area, check out, get with a local agent. That's how you buy a home in today's market, no money down. Through traditional methods. There's other methods out there in terms of owner financing and hard money lenders. This is going to be the least expensive way for you to go, just FYI. If you want to talk more, let us know. You can message us. Also, as I mentioned, thumbs up the video if you like it, and subscribe to the channel. Thanks for tuning in, y'all. Bye-bye.
Hello, my name is Blake DeBott. I'm with Magnolia Home and Auto. Living in the Gulf South means we must always be prepared for the possibility of a hurricane arriving with little warning. To ensure you're ready in case a storm heads our way, here are a few essential tasks to be handled beforehand. Number 1, review your insurance policy. Double check that your policy is active and hasn't been canceled. Sometimes cancellation notices can get lost, leaving you without coverage. Confirm that your policy is in place and has been paid. Take the time to understand your coverages and deductibles, and don't hesitate to discuss any uncertainties with your agent. Number 2, gather important documents. If you have flood or homeowner's insurance, make sure you have copies of the policy's declaration page. Be sure to take these documents with you if you have to evacuate. Number 3, keep contact information handy. Obtain direct contact numbers for your insurance carrier so you can file a claim if necessary. During a storm, power outages may make it difficult to reach your agent, so having the carrier's contact information on hand will help you start the claims process promptly. Number 4, document your belongings. Prior to a hurricane's arrival, take video and photos of your home and its contents. This documentation should include all interior furniture, electronics, clothing, and other valuables. Don't forget to capture the entire exterior of your home, including the roof's condition, as well as any detached structures. By completing these tasks in advance, you can better protect yourself and your property in case of a storm. Being prepared ensures a smoother claims process and gives you peace of mind during uncertain times. If you have any questions, don't hesitate to reach out via phone or email, and stay safe.